Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about First Hawaiian INC quarterly report. First Hawaiian Inc. offers a wide range of banking products and services through its three segments: retail banking, commercial banking, and treasury and other. The company's services include deposit accounts, checking, savings, time deposits, mortgage loans, home equity lines of credit and loans, automobile loans and leases, lines of credit, small business loans and leases, credit card, and merchant processing services, commercial and industrial lending, auto dealer flooring, commercial real estate lending, construction lending, wealth management and financial planning, insurance protection, trust and estate services, private banking and investment management, retirement planning. These products are offered through various channels, including branches, online and mobile platforms. The First Hawaiian Inc. (FHB) stock price has remained relatively stable over the past year, with no significant changes exceeding 0.6%. While the company experienced notable fluctuations, including a 3.6% year-to-date decline and a 52-week trading range of $28.80 to $20.32, its stock price has not made any substantial movements. Several key news events have occurred during this period, but none appear to have caused a sustained lack of significant movement in the stock price. These include the restructuring of First Hawaiian's investment portfolio, which was expected to increase net interest income and margin. Quarterly earnings reports that beat analyst expectations, but still resulted in a year-to-date decline. Routine dividend declarations that are generally anticipated by the market. The broader regional banking sector has shown fundamental strength, with analysts projecting a positive outlook for 2025. However, this general sentiment may not have contributed to a sustained lack of significant movement in FHB's stock price. In conclusion, pinpointing specific news items that caused a sustained lack of significant movement in First Hawaiian Inc.'s stock price is not feasible. The absence of surprising or materially impactful news, or a balance of offsetting factors in the market, may be more responsible for this phenomenon. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by a significant increase in non-interest income, which rose by 114.2% in Q3 2025 and 211.6% YTD 2025. Net interest income also contributed to the growth, increasing by 6.4% in Q3 2025 and 14.1% YTD 2025. Other key drivers include upfront fees on dealer swaps, net realized gain from sale of Visa Class B restricted shares, and servicing fees. On the other hand, revenue decline is primarily driven by a decrease in treasury and other non-interest income, which fell by $33,454. Additionally, credit and debit card fees, trust and investment services income, and unfunded commitments to fund low-income housing tax credit investments also declined. Net income and profit margins. A shift in favor of growth. The financial summary reveals a positive trend in net income and profit margins over the past year. Net income has increased by 20% for the 3 months ended September 30, 2025, and 16% for the 9 months ended the same date, compared to the previous year. Profit margins have also shown improvement, with return on average tangible stockholders' equity increasing by 173 basis points, from 15.35% in 2024 to 17.08% in 2025. This significant increase is a result of higher net interest income and non-interest income, as well as lower provision for credit losses and non-interest expense. However, the decrease in net interest margin, from 62.6% to 59.3% for the 3 months, and from 63.1% to 61.7% for the 9 months, is a notable exception. This decline is partially offset by an increase in provision for income taxes and provision for credit losses. Overall, the data suggests that the company's financial performance has improved, driven by increased revenue and reduced expenses. The company's financial performance indicates a consistent trend of generating positive operating cash flow. The data from 2024 and 2025 shows an increase in net cash provided by operating activities, with figures of $203,688 and $230,175 respectively. This upward trajectory suggests that the company is successfully managing its operations to produce a surplus of cash, which can be utilized for future growth and development. Interest expenses have decreased significantly. The company's interest expenses have undergone a notable reduction in recent periods. For the 3 months ended September 30, 2025, interest expenses decreased by $21,045, while for the 9 months ended September 30, 2025, they dropped by $54,873. This decline indicates that the company has successfully managed its debt obligations and reduced its financial burden. However, the picture is more complex when examining debt levels. While total liabilities increased by $154,107 from December 31, 2024 to September 30, 2025, a specific category of debt, uninsured time deposits and short-term borrowings, actually decreased by $250.1 million. This mixed result suggests that the company's debt management strategy is multifaceted and has yielded both positive and negative outcomes. Management is optimistic about the company's outlook, citing several key points. The company is adopting new accounting guidelines prospectively, starting from future reporting periods, to maintain transparency and accuracy in financial reporting. Management believes that expectations reflected in forward-looking statements are reasonable as of the date made. The company has a strong capital position, with a Common Equity Tier 1 capital ratio of 13.24% and total capital ratio of 14.49%. This allows for flexibility in managing liquidity risk and meeting routine funding requirements from core deposits and selling residential real estate loans in the secondary market. Management also expects to meet its cash requirements within the next 12 months and beyond, citing sufficient existing cash, investments, and cash expected to be generated from operations. Additionally, they project that net interest income will benefit from higher interest rates, providing a positive outlook for the company's financial performance. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid out dividends totaling $98,796 in 2025 and $99,655 in 2024, as stated on page 14 of the report. Additionally, the company utilized $74 million to repurchase shares, as noted on page 108. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights 2 significant concerns that could impact future cash flows: supply chain disruption and inventory buildup. Global supply chain issues are identified as a potential cause for decline in expected future cash flows, page 132. Furthermore, the months of inventory for single-family homes and condominiums are notably high at 3.4 months and 6.4 months respectively as of September 30, 2025, page 102, indicating an accumulation of unsold units that could lead to further complications in the market. That concludes the financial summary for First Hawaiian Inc. Feel free to comment below, and I will be happy to answer them when possible.